Welcome to CEO Interviews, a production of Gorcom in which we take the time to speak with small cap executives about recent important developments at their companies. With us today, I'm happy to have Chris DuPont. He's president of Explor Resources. The company trades on the TSX Venture Exchange under the stock symbol EXS. For our friends in the United States, EXSFF, and for our friends in Germany, E1H1. Now, for those of you who are new to the Explor story, this is a gold and base metals exploration company. They've got significant holdings in Ontario, Quebec, New Brunswick, and Saskatchewan. Now, that sounds a lot like a lot of other companies out there, but more than just lip service, the company's flagship property is called the Timmins Porcupine West. It has a 43-101 resource, 609,000 ounces indicated, 470,000 ounces inferred, and they've optioned the property to Teck Resources, who has spent $12 million, that's right, $12 million to earn a 70% interest. The property is located just 13 kilometers from downtown Timmins, and here to talk about that more is Chris. Chris, welcome to the show. George, I'm really excited to be here today to speak to you about our projects. Timmins. Glad to have you, Chris, and that's what I want to talk about first is that your Timmins Porcupine West, or TPW, just to save people the bandwidth at home. How promising is TPW? How big is this really? Well, Timmins Porcupine West is probably one of the biggest gold projects in Timmins at this time. Probably one of the biggest gold projects ever in the Timmins camp, with a strike length of over 2,000 meters, when the average mine in Timmins had a strike length of 350 meters. This is about 6 times bigger than any other project in Timmins camp. The porphyry that we have, the Timmins Porcupine West porphyry, or the Bristol porphyry, is about 5 times bigger than the Hollinger McIntyre porphyry. So it produced in the order of 30 million ounces of gold. So the Hollinger itself produced about 20 million ounces, the McIntyre 10 million ounces, and they're still mining in that area now. Goldcorp has taken over that property, and they're developing 3 open pits in the area, and they expect to get anywhere from 3 to 5 million ounces out of their open pits on the old Hollinger McIntyre mine area. Let's talk about who you're closest to. It seems like you're closest to the West Timmins mine, Lakeshore Gold's project. What does that mean for you? Well, we're close to Lakeshore. Lakeshore has been taken over by Tahoe Resources. Right. Now, Lakeshore is on the same structural trend we are. Now, they have probably about 20% of the porphyry, and we have 80% of that porphyry. Now, in any porphyry type mining operation in the Timmins camp, the porphyry is the key. The larger the porphyry, the larger the potential gold deposit. So when we built the model, we feel that we have a model that can produce in the order of 20 to 30 million ounces of gold on that strike length of 2,000 meters. So Tahoe is close to us. And I hear rumors that Tahoe is really interested in what we're doing. In fact, probably very interested in our property. Let me play devil's advocate here for a second. When did you acquire TPW, and how were you able to acquire it? Because it seems like an incredible find, and somebody lost it. So how were you able to pull this off? Well, what happened there was very, very interesting. Darren Wagner, who is the president of West Timmins Mine, called me up back in 2009 and said, Chris, I hear that you have the Timmins Porcupine West property, or the Bristol property at the time. Now, I had just left a company called Tom Exploration, which had the property. Tom decided to sell it, so a prospector bought it. Now, Darren, when he brought that to my attention that he was interested in it, I took it to the board and asked the board, do you think we should acquire the property? The board says, sure. So then I called the prospector, and I said to him, I'd like to buy the property. He said, well, West Timmins Mine in Lakeshore have been after me for the last 6 months trying to buy it, and they want to give me $50,000 and no shares. And I want $100,000, and I want 5 million shares. So I said to him, guess what? Why don't you meet me next week in Timmins, and we can discuss it, and I'll see what I can do. So then I met the guy. I gave him a check for $100,000 and told him he was going to get his 5 million shares, so he sold it to me, and then I put out a press release. So Darren was quite upset, and he said, well, I thought you owned it. I said, no, I didn't own it. The prospector did. So now we did. He ended up being scooped on it, and then there was a gentleman who worked for Lakeshore, Dr. Situ. Situ called me up and wanted to buy it. And I said, well, Situ, I'm not a real estate broker. If
if I buy a property, it's because I think there's some gold on it and I think we can develop it. At that time, TPW only had about 70,000 ounces on it, and they only had a strike length of about 350 meters. But because I'd done some modeling before when I worked for Tom, I felt there was a potential of at least a 2,000 meter strike length and a potential of maybe 20 to 30 million ounces. So I was really happy to get it. Once I got it, I started doing work on it, and that's where we did our first 10,000 meters, and I was quite excited because I drilled a strike length of 2,000 meters, and every hole I drilled, I hit gold. So I was ecstatic. I said, this is fantastic, you know? So then I drilled 10,000 meters. I got a 2,000 meter strike length. I was really, really excited. I put out a press release to the market. The market yawned, and I said, I don't understand. We have gold in every hole. We've got a porphyry, but the market wanted to see 10 or 15 grams over 5 or 10 meters. We gave them a couple of grams, several places in the intersection. So then we raised more money. We raised 10 million. We did another 20,000 meters of diamond drilling, and that's when we started to put it together as far as the three-dimensional model, where the gold was, tied the veins together, found out there was 24 veins, and we had a company out of Toronto do a 43-101, and then we started building the ounces. We started with 70,000, then we had 200,000, then we had 400,000. By the time the third 43-101 was, we had over 1 million ounces of gold and a strike length of 2,000 meters, and it was all connected. We even had a surface open pit resource with a potential of 200,000 ounces, which is fantastic. 13 kilometers from downtown Timmins.
So at what point, Chris, did you guys think it was necessary to bring in Teck? And how did you get Teck Resource signed such a massive option agreement?
Well, once we had 2,000 meters of strike length and we had 1 million ounces of gold, then we said, what is it going to cost us to develop this into a mine? We know we have a potential of 20 to 30 million ounces. We said, well, a junior like us is going to have to raise $500 million. And I said, now who around has that kind of money? So I started looking around and I said, Goldcorp has money. Barrick has money. Teck has money. Teck was involved in Hemlo. So I said, hey, maybe these guys might be interested. So we contacted Teck. They sent out some people to look at it, and they were quite excited about it. Because of the potential of 20 to 30 million ounces, they felt, hey, maybe we have another Hemlo here. They produced close to 20 million ounces out of Hemlo. So that's where they got excited. And I said, hey, if you guys want to sign a deal, we're quite interested in that if we can have a major partner with deep pockets that can afford to develop it, let's structure a deal. Now, we structured the deal in that they have to spend $8 million in order to gain 55% of the project. Now, if they don't spend the $8 million, they gain 0% interest in the project. So the money has to be spent. After the first option/joint venture agreement, then they gain their 55%. Now they have another option to gain another 15% by spending another $4 million. Once that is finished,
$12 million for 70% that we talked about.
Exactly. And then it goes into a joint venture mode where each side goes after to continue on the project.
So how's it looking so far? Has Teck completed their first year of earn-in? And if so, what's next after this?
Well, Teck has completed the first in of earn-in by May 1st of this year. Now, it looks like they want to continue with this, which means that they're going to spend probably anywhere from 2 to 4 million. Now, they only really have to spend 1.5 million for the second year, but it looks like they're going to spend significantly more, and they'll probably do a significant amount of drilling this fall and winter on the area. So they've done a lot of technical work. They've reviewed all the core, all the data that we've had. They've done some drilling. They've had some gold intersections. They were quite happy, quite excited with what they got. Now they're going to go on to phase 2, which will be additional diamond drilling at depth to go for the high grade.
And it may seem obvious to people at home, but is it a safe assumption to make that when a company accelerates its minimum spend for an earn-in period, that's very good news, that things are going better than they expect? Is that a safe assumption, or maybe there are other reasons for doing it?
I think that's a safe assumption. I think if you look around, you'll probably see that we're probably one of the most advanced projects going in North America at this time with that kind of potential, located in a major mining camp. So I can see why they'd want to accelerate and do more work and advance it. And that means that it'll be sooner than later that they'll earn their 70% interest.
Now, Explor isn't a one-trick pony. Mind you, if that was your one trick, TPW is unbelievable, unbelievable project to have. But you're not a one-trick pony. That's the good news. So you've got several others, but the two I want to talk about briefly here is first the Ogden property. You just released some recent results from it. And this is a property that sits just northeast of TPW. In fact, Timmins Porcupine West leads right into it, correct? Talk to us about Ogden and how you feel about that.
Well, Ogden sits, to correct you, it sits in the southeast portion of Timmins Porcupine West. Now, the Mataga River Fault divides the two projects, right? So we have one on one side, one on the other. Now, what we've done initially on the 1,500 hectare property, which is large, we've drilled 3 sets of 2 holes each, spaced about 2 kilometers, in order to determine, do we have the right kind of geology? Is there any gold in the environment? And yes, we confirm that. We confirm we have the porphyry. We have the right type of alterations. We've got the faults coming off the Porcupine Death Store, the faults being the plumbing system that carry the gold to the structural traps. The porphyry is the heat engine that causes the fractures and the porosity of where the gold is in place. We have the gold as confirmed in 2 of our holes, which is very, very exciting to us. Now that property is huge and wide open. So it's similar to our Timmins Porcupine West, where we put in a first round of drilling of 10,000 meters in order to determine, was the structure there? Did it exist? Was the potential there? So we've done the same thing on Ogden. We drilled. We found, yes, it's got the right kind of rock. Yes, it's the right kind of environment. Yes, there's the faults there to convey it as a piping system. And yes, there's gold there. So to us, it was very, very successful and very excited about Ogden.
What's next? What's next for Ogden? It's obviously going to do more work. How much more work do you plan to do at this point?
Well, we plan on probably drilling this fall in Ogden. The geologists and our staff will analyze it to say, okay, what do we have? Where should we go? Where should we drill? And how should we advance the project? And I suspect this fall and winter we're going to have a drilling program on Ogden. And as you had said in the past, we're not just a one-trick pony. We've got 20 properties in Canada. We have 3 of them that are active right now. We've got our Kidd project, which will base metals close to the Kidd Creek mine. We're currently drilling on the Kidd project, and it's looking very, very exciting there too.
What's next for the Kidd project? What can you tell us about what you found so far and how it's looking for the future?
Well, I can tell you some, but I can't tell you everything.
Well, we try and get as much out of it as possible.
Well, I can tell you that we hit a rock type that hasn't been hit in the Kidd Creek area since probably 1965, which is very, very exciting because it's an indicator and a precursor to a VMS deposit. So that's what we're looking at right now. North of the mine, we've hit some rock that is very, very exciting to us, and we're going to sit back and analyze that, and we're going to drill into it, and we'll see what happens from there.
Last question for you. What differentiates Explor from its peers? Because it sounds like, if I can summarize what you've done so far, you're clearly a capable management team of finding great projects and outbidding guys who are coming in cheaper than what you're willing to do, and that's how you scored TPW. You guys are smart enough to be able to do your own work and move the resource forward, and then on top of that, you're able to then negotiate these kind of agreements like with Teck Resources. What's a differentiator above and beyond that for Explor that puts you ahead of most of your peers?
Well, once we have an experienced management team, which is very, very important. 2, we have the technical competence to move the project forward. Most of the people on our technical staff are geologists that are in their 60s, 65 years old, have 30 to 40 years experience, have seen mines and rock of that nature. 2, we can raise the capital to do the work. And 3, we have excellent projects. So that all those 3 factors make the company an excellent property or an excellent company for people to invest in. We're a junior company with the staff, the money, and the people to do the work. That's what puts us ahead of our peers. Plus that, we have a good stable of properties. And, we're discussing, there are many juniors talk to us and want to either joint venture or option our properties. So we're also considering that as another avenue. We're developing the company and increasing shareholder value.
Chris, I want to thank you for taking the time out to talk to us today. There's no doubt that we could probably sit here and speak for an hour about everything, but so I prefer that what we do here is we just cut it off at this point and look forward to having you back on the show in the fall, when no doubt you're going to have more news coming out of TPW, out of Ogden, and out of your kid project. So thanks so much for taking the time to speak with us today. Congratulations on fantastic work to this point. You're exactly what the small cap resource space needs: real companies with real resources, real partnerships, and looking forward to having you back on the show sometime very soon.
Well, thank you very much for your time, George. I enjoyed speaking to you today and giving the quality of our projects to let our investors know that we're there and we're working for them. You've
been watching Chris DuPont. He's president of Explor Resources. The company trades on the TSX Venture Exchange under the stock symbol EXS. In the U.S., EXSFF. And for our friends in Germany, E1H1. Get yourself over to their website, explorresources.com. They've got a fantastically laid out website, great information, easy to follow it through, so you can do more due diligence on the great projects you've heard Chris talk about today. Thanks for joining us, everyone. Have a great day. Have a great remaining summer, and we'll talk to you next time.